Friday, October 5th, 2018, Monaco 64, home of alternative economics and contrarian views. This morning, I'd like to talk about the futures market and how the bankers and central bankers control the gold price through the COMEX. And I'll touch upon Bitcoin as well, because I made a video last October warning that the new CME Bitcoin futures contract is just a banker, instrument to try to control the Bitcoin price. Can I prove that they're controlling the Bitcoin price? Not yet, I don't think. And I'll look at some data that might shed some light. In the futures market, it's definitely controlled by the bankers and has been for many decades. And I'll look at a respected analyst in the precious metals sector called Jeff Christian of CPM Group. The guy is basically not a friend of gold, even though he comes across as a friend of gold. He's a friend of the Goldman Sachs crowd and the central bankers, the IMF and World Bank. And he's proven through his comments how badly manipulated the gold market is. But we'll cover that in a minute. It's 8:18 a.m. London time. I'm going to look at the market, see how they're doing this morning. Yesterday was a very interesting day. The 10-year yield almost went up to that 3.25 level, went up to 323. The Dow was down over 300 points at some point during the day. It rallied to finish only down 200, and 200 is not that much when we're trading, at 26,000 and change. But let's see what we're doing this morning and where the bonds are. Spot gold stuck around this 1200. Yesterday it got up to 1207, but the bankster control is still there in the precious metals. It's right now 1197.30, right near the lows of the overnight session. The high's been about 1200.5, $1,200.50. Silver's 1451, down 7. Right near the lows. The high's been 1462. The Dow futures down 2 points, so not much. It's not up though. It's at 26,625. It has been up as much as 100 points overnight though. S&P is down 0.75 point. NASDAQ down 16 points. NASDAQ 100 futures down 0.2%. So yeah, stock market's still not being able to recover at the moment. Currency-wise, the pound is a little stronger, up 0.2%, 130.47. Euro is down 0.1% at 115.01, and the dollar is unchanged against the yen, 113.87. Today as well, we've got the jobs data, non-farm payroll at 8:30 New York time. The street expects an increase of 180,000 non-farm payroll jobs. Well, they're hypothetical jobs, really. And the unemployment rate, which we all know is a phony rate, is expected to drop from 3.9% to 3.8%. Yes, the economy might be doing a little better under President Trump. Why? Well, because he's pumped so much debt into the economy. The budget deficit has been 1.3 trillion over the last 12 months. It's going to be 2 trillion over the next. Of course, the economy is going to pick up with all that extra deficit spending by the central government. There you go. The guy who's supposed to make America great again is indebting America even more. Dollar yuan, 690. Dollar a little firmer there, 0.2%. Crude oil came off yesterday quite a bit, but still WTI is up 0.5% this morning at 74.75. Brent is up a third at 84.87, so still elevated oil prices. What about the bond markets? Well, the 10-year right now, let's see, is at 321 actually. So we just spiked here. We're up 2 basis points. The range today is 319 to 321, so still fairly quiet. Yesterday's high was 323, so not looking good, the bond markets. Even the Italian market a couple of days ago rebounded and yields dropped, but we're coming right back up. The 10-year yield in Italy is at 335. Right near, still about 10 basis points off the recent high at 345. What about other bond markets? Well, it's affecting the UK bond market. We are at 170, the 10-year yield. It's up 3 basis points today, and it's up about almost 15 basis points in the last couple of days. So when American rates rise sharply like that, it will affect the whole world. Some of you have asked me about that. So now, the gold futures market and the Bitcoin futures market. So I'll put a link or I'll put it up in the cards. I made a video on October 31st last year about Bitcoin futures, and I'll put it in the link in the description below as well. And the question is the bankers, the title of the video is "The Bankers Hijack Bitcoin as CME Set to Launch Futures Contract." And I've looked at some of the data here on the commitment of traders for Bitcoin, Chicago Mercantile Exchange, and the open interest on Bitcoin right now is 2,746 contracts. The contract specification for the Bitcoin futures, each future is 5 Bitcoins. So right now, equivalent in Bitcoin is the open interest is 13,730 Bitcoins. I'm not sure exactly how much of an impact the Bitcoin future is having on the real price of Bitcoin, but you have to understand that these futures contracts or this there's no delivery. Of course, it's just a price setting mechanism, just like gold, even though they allow you to take delivery in gold. But I can tell you, working over 20 years in the futures market in the City of London as an institutional futures broker for big clients, never in those 20 years did I ever see anyone take delivery in precious metals. All my bosses I work for and other people that I know of in the industry, they all discourage everyone from taking delivery. It's very rare that delivery is taken. So in gold and silver, so we can say that safely say that the gold futures on COMEX, legally it might be a physical contract, but de facto is just a bucket shop. Bucket shop is the term used in the early 1900s for people like Jesse Livermore who were couldn't join the exchanges to trade real stocks, so they just they bet on the prices, and that's what bucket shops are, and that's what the COMEX is for the gold and Bitcoin futures contract. So I want to play a clip here because someone sent me an interview of Jeffrey Christian, and here's Jeffrey Christian. Here's his background. I'll read a little bit about it. So what does it say? So Jeffrey Christian is the managing partner of the CPM Group, and he's attending the Denver Gold Group networking luncheon. Sounds really good, doesn't it? And then it says, he has been a prominent analyst and advisor on precious metals and commodities markets since the 1970s, with work spanning precious metals, energy markets, base metal, agricultural markets, and economic analysis in general. Mr. Christian is considered one of the most knowledgeable experts on precious metals markets, commodities in general, and financial engineering using options for hedging and investing purposes. Well, for that, read COMEX, futures, options, maybe OTC options as well with the bullion banks. And it says he founded the company in 1986. And this is the interesting part, spinning off the commodities research group from Goldman Sachs and Co. and its commodities trading arm, J. Aaron and Company. So, and it goes on to say he has advised many of the world's largest corporations and institutional investors on managing their commodities price and market exposures, as well as providing advisory services. This is the clincher to the World Bank, United Nations, and IMF, and numerous governments. Well, for numerous governments, you can say central banks and the BIS for that matter. So what's Mr. Christian saying? Well, he interviewed this lady from Investing News, and I'll play it was a actually it was a gold forum, September 23rd to 26th, 2018 in Colorado Springs, Colorado. And I'll play what he said here, I found it really interesting. I'll play it. 1 second. There we go.
30 or 40 million ounces. The gold market itself, meanwhile, is not really geared up to supply that extra 10 or 20 million ounces. It's not there. So the only way that investors can...
So he just said, why is this important? And I'll tell you why. He just said that the gold market cannot supply an extra 10 to 20 million ounces a year. And that he means, of course, physical gold. So he says that gold is just not there. That's what he said. Jeffrey Christian, the guru of precious metals analysis. But then, I had a look at the COMEX gold. This was a couple of days ago. I looked into that. I looked at the contract specs, of course, and you can see that one contract is 100 troy ounces. At this, the gold futures on the CME or COMEX. CME bought COMEX. And then I looked on the same day how many contracts or lots, the volume traded on the December gold contract, which is the front month. And at that time, it was late in the day, it had traded 242,369 lots. So what's that the equivalent in ounces? Well, it's 24.2 million ounces in gold, and in one day. And Mr. Christian is saying that if investors buy an extra 10 to 20 million ounces a year of physical gold, it would drive the only way to accommodate for that is much higher prices, right? And here we have on COMEX trading 24.2 million in one day. And you might say, well, but for every short there's a long, it's artificial demand as well. Yeah, maybe so, but that artificial demand, instead of being on the COMEX trading futures, they could be out in the physical market buying gold, couldn't they? And that extra 24 million in supply is completely fake. So what I'm trying to say is that the COMEX is just like, I'm sure many of you have heard of all the fake Rolexes, fake Gucci watches, fake luxury goods. I mean, Hong Kong, Dubai, Cyprus, and other places in the world are renowned for selling all these fake Rolexes, for $30. Some of them are more. And would Rolex and Louis Vuitton from France or Gucci from Italy, would they form like a world luxury good council and not, to try and encourage people to buy more luxury goods and actually work with these people who sell fake goods in Dubai or Hong Kong or Singapore or wherever they sell it, like the World Council does? Would they work with Jeff Christian, who promotes the COMEX and doesn't even get out there and expose the COMEX? Is Jeffrey Christian really a friend of gold? No, he's not. And that's why I advise people who want to get involved in gold to buy the physical, to buy the gold coins or bar, or even silver, of course, physical. It's the same story for silver. It's on the COMEX as well. Can you imagine if 10 to 20, if everyone bought an ounce of gold a year, that's 10 to 20 million people. It's not a huge proportion of the population. So now you understand why the mainstream media, mainstream economists, Jeff Christian, people like that, don't encourage people to buy physical. I mean, you can listen. I'll put Jeff Christian's video above in the cards in the description. You can listen to him as well. He doesn't really consider gold money. He says people should trade it more as well, have a little bit of physical. He's a shill for the central bankers, and that's who he works for. So he's no friend of gold. I still find it amazing that these gold mining companies get advice from this guy. It's just crazy. So with that, in mind, I sent him a note. I went to the CPM website and I sent a note to him, and I haven't gotten a reply, probably won't. And I say, "Dear Mr. Christian, in a recent interview with Charlotte McLeod on Investing News, you pointed out that an extra 10 to 20 million ounces of gold purchases a year would drive the price substantially higher. With COMEX front month today, October 3rd, 2018, trading over 240,000 lots or 24 million ounces, wouldn't you say that the gold price is a fictitious price set in an exchange that where one hardly ever sees the delivery of the real metal? If not, then you probably do not understand markets. But knowing your background at J. Aaron/Goldman Sachs, I most certainly do not think you are ignorant of how markets work. My question to you is the following. If you are in business to promote interest in the precious metals, and especially gold, and seeing that you are very well connected, IMF, World Bank, BIS, etc., shouldn't you be exposing the fraudulent nature of the COMEX and how a bucket shop like that exchange totally governs the price of physical metal? Can you imagine how much higher the gold price, the price of gold would be if the COMEX, and I would say also the LBMA, was not able to provide 24 million ounces of gold per day? I look forward to hearing back from you. Kind regards. So you might ask, oh, is he really working for the central bankers? Well, I'll show you. I've got another clip here of him talking about that, and you can see for yourself. Here we go.
It really should come from the IMF and the World Bank, with whom we work.
Okay, so you will be presenting a solution.
So you see, he works with the IMF, World Bank, and other central banks. So there you have it. Buy the physical. Don't play the Jeff Christian game of futures and options and paper gold or snide gold. That's what Jeff Christian is peddling. At the same time that he's peddling gold, he's peddling fake gold. Would Rolex do that? Would Rolex encourage people to go to Hong Kong and buy $20, $30 Rolexes? Of course not. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. And you can also follow me on Steemit, DTube, and on Twitter. I'll talk to you later. Take care. Bye.